Good afternoon. How are you doing? Down there. Afternoon. How is everybody? Happy Thursday. It's Thursday, isn't it? Reverend, Mumbo, FTNet, George, even Callum, Fletch, Crom, David. How we doing? Brian, Neo, XRUpdate.news. David, thanks for the $5. Good day, goat. Like it. Like the emoji. Thank you very much, David. Very much appreciated. That $5 goes towards my vet's bill I had to pay today. My dog went for a walk this morning and went through a little bit of long grass, got a seed in its ear. £63 later, seed removed. That was the most expensive dog walk I've ever been on with my dog. Afternoon, Virginia. So there you go. Do not let your dog go in long grass. Bad. I just discovered. I already knew that, but she's been running through long grass all her life. She's 8 years old. This morning, however, £63. Did I just hear a wish when you put the camera on, or am I hearing things? A wish? A whoosh? I don't know. Whoosh. No idea. I've got my fan on. Is that what's whooshing? I don't know. If it's too noisy, the fan, let me know and I'll turn it up. Right. So just quickly before it all kicks off, at past, go through the news this morning and what's happened. We've got basically Japan again moaning, as they do. The finance minister hopes for a stable movement on FX. It's like, please, sir, can you not destroy our currency? Declines to comment on specific Forex exchange levels. As we know, they never say what level they're going to intervene. Aims for a balanced FX movement. You're not getting it. Importance of blah, 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 blah. And they're monitoring, ready to take action. So again, threats of intervention from the Bank of Japan. Again. And we've had a bit of that. Excessive FX movements. Hayashi talking about it this morning. There's a lot of people talking about it this morning. And again, if you scroll on, there's more in here. Elevated interest rates, blah blah blah. But there's something else in there about FX moves. So they're on the case. Yeah. Uchida, the weak yen is an upward factor for prices, closely monitoring and conducting monetary policy. Yeah, they are very much finger over the button on this one. So US dollar yen movement. Yeah. It's we've had a reversal and a retest this morning. We didn't quite get that second down leg. We didn't manage to break the low of the day on that second run down. So if we run down in the open today, that's beautiful market structure reversal there. So we might get some movement down. I had to take a loss yesterday. I took a 1% loss. As you can see, I scaled out of something. I said I was going to scale out of some of this yen if it broke 160, and I did. I took 2 positions off. However, I decided to add another one on when we got to 150 ADR, I think it was, something like that. What did we hit? 122. Yeah, about 130, 150 ADR. So I added another one on. So yeah, I've got 4 positions on, but I'm hovering. This is sitting at 1.6% of drawdown. I've already taken a 1% loss on it. If it doesn't come down and it goes up today, I don't really want to hold a position on it. I don't want to get into the situation I was in last time. But before a pump from the yen, we tend to get an aggressive move against it, which we had yesterday. So that's the reason I got into another one, because we had an aggressive move against the yen. And that's what happened last time. Every time we get an aggressive move, then they press the button. So I was anticipating that happening, but it hasn't. So we'll see what happens on that one. Very disappointing Bank of England news today, i.e. there wasn't any. I was hoping we were going to get Bailey saying something. Bailey didn't even talk today. Hauser stood in. So, sorry, Hauser. There's someone else talking. I'm sure I saw another BOE talking. Maybe I got them confused. But yeah, there was nothing from Bailey at all about interest rates. So very annoying there. The we had Bailey speaking at 10:30. Didn't seem to happen. So we've got no more forward guidance on when this interest rate change is going to come. So we've had nothing out of the pound today, which I was expecting to get a move today. We didn't get it. More from the Bank of Japan. We've had core durable goods. GDP for the US came out as expected, so nothing exciting there. And that's about it. So rest of the news today is basically pending home sales at 3 o'clock, which is nothing. That's not going to do anything really. Very rarely does. So today's main unemployment claims came out bang on forecast. GDP came out bang on forecast. Bailey didn't talk. He's a write-off, basically. So nothing's happened. So as you can see, US dollar yen sitting there in the middle of nowhere. Pound not really gone anywhere. It's gone up, it's gone down a bit. Euro, bit of a rally on the euro going in at the moment, but nothing dramatic. Aussie's not really moved. So basically the day's just dead. We've had nothing, which is fine. How did you find out the dog had a seed in its ear? Basically she was going, oh, I can't do that too much. Got to stop my brain rattling. Yeah, she was basically shaking her head constantly, going like that on one side of her head, so we knew it was in that ear. I'll give myself a headache. Afternoon ago, sir. Friend of mine is a vet. Busiest time of the year for ticks and grass seed issues. Yeah, that's what the vet said. I phoned up the vet and said, hi, my dog seems to be shaking its head. It's got a grass seed. Bring it in at 11:45. It's like literally £63 next, £63 next, 63. How many of these can I get in an hour? Milking it. Absolutely loving it, the vets. Afternoon, Gregors. Could this be a slower move down on the dollar yen like back in November 2023? Could be. Afternoon, Hussein. Yeah, could. I mean, it's a market structure break. So we've had a shift. So reversal and retest. We need that leg down. And then we're going to get support here. We're going to find a little bit of support there. And then we're going to find some support somewhere down there. So we've got three main areas we've got to bash through, basically. Don't know. It could be the threats are working. Don't forget, the banks have had a very sharp reminder recently of what happens when the Bank of Japan intervenes. Yeah, you're on the wrong side of this, you're going to get hurt. We shall see. Do I intend to swing trade? It's all I do. The same. Is this for your first time in here? Go to the website, go to the Position Trading Bootcamp. It's free. Go and watch it. Change your life. Basically teach you how to position trade. Afternoon, Abdi. So, US markets so far today, not a massive amount of movement, as you can see. The Dow is very, very flat. We've got a little bit of upward momentum on the S&P and the NASDAQ. Highs and lows are miles away. So there's an easy ADR movement on the cards today at the open, but we'll see if we get any momentum. ADRs so far today, the only thing we've got ADR is New Zealand CAD and New Zealand US. But if you look at why they are hits, you can see we've got a whacking great broker candle gone in. You can't see that, but there's the wick of that candle. So actually, when you actually look at the movement today, it's not really an ADR. It's more to do with broker spread this morning. So actually, that one's an ADR, just about. So New Zealand US is just about an ADR because that actually didn't get a broker candle. So potential short on that. I'm long on New Zealand US at the moment, though. So happy with the way that's going. But yeah, there's nothing else today, really. Those are the only two ADR hits. Weekly range hit on Aussie, New Zealand. So there's an opportunity for a weekly. It's already played out. So that was this morning, look. Actually, that hit yesterday, didn't it? Where are we? Thursday. Yeah, that hit yesterday, I think. So you would have gone in if you wanted to take a weekly reversal yesterday, and that's starting to play out nicely. But that's about it. RSI's totally flat on the hourlies. 4 hours totally flat, apart from our friend the CAD yen and the US yen, which are obviously starting to turn now. So there's options there for shorts, obviously. Nice divergence there as well, look, on the US yen. So we are starting to get some bearish divergence coming in as well. And this 160 level, 160, I think it's 160.150 is basically the last intervention. So we may well get the market getting a little bit jittery about going any more long positions up at this level. So we'll see what happens today, but nothing much else to report today. Okay, Dow is rallying pre-market. So we got a minute to the open. What type of dog do I have? I've got a cockapoo. If I've got any pictures of my dog. I probably have got some photos of my dog because it's my dog. But yeah, there's one. She's such a poser. That's my dog. She likes to pose for fireside shots as well. Yes. It was that ear. That was the ear, the offending ear that cost me £63. Okay, long on the Dow. Pre-market ranges on the Nasdaq. Too tight. S&P pre-market looks good. So see if we get a break on that. A little bit of volume coming in on the Dow, but that big pre-market spike hasn't helped much this morning. These vets are all corporate owned who give huge debts, who have huge debts. So now it's syringe in one ear and card reader in the other. Probably, yeah. Afternoon, Mark. What pairs do you consider as swing pairs? Swing trading is a style of trading. It's nothing to do with an instrument. Something moves up and down. You place swings. Swings are market structure. Yeah, when the market moves like that, that's a swing high. That's a swing low. That's a swing high. That's a swing low. That's a swing high. Swing low. That's swing trading. It's nothing to do with an instrument. It's a style of trading, isn't it? Be done on any time frame. All time frames have got market structure. All time frames have swings. Strong move up on the NAS. S&P trying. Dow being annoying. Wait and see. So then Dow's basically just rejecting that little high we've got there just before the open. Very, very tight range on this Dow today. No movement yet so far at all, so it could go anywhere. News-wise, obviously, we've got pending home sales at 3. The market probably won't hang around for that. And there's not really any news tomorrow either. We got PCE tomorrow afternoon. But apart from that, that's it. So it is end of quarter tomorrow. So we might find we get some volume starting to come in today or tomorrow. Euro CAD just hit ADR. Euro's really rallying. Trying to anyway. So yeah, so we might find we get some decent volume coming in tomorrow. The dog needs to be added to the John Wick photos. Yeah, well, if you just basically, she is a bog standard cockapoo. Yeah, if you wanted the definition of what a cockapoo looks like, that it doesn't pose with her arm out. That is it. White beard, white chest. She's got bits hanging out. I better censor that. But that's the bog standard cockapoo. So if you ask AI what a black cockapoo looks like, that's it. They all look the same. Yeah, we could incorporate her into John Wick. While we're speaking of John Wick, the thumb. Dow break high. S&P's breaking long. Ooh, nice little break on the Dow. Look. volume coming in this morning. Had to take a loss on the FTMO account yesterday as well. New Zealand CAD, US dollar yen. Had to take a loss on the US dollar yen yesterday. And New Zealand dollar CAD. That buy didn't work out yesterday. So I had to take a loss on that one, but today's one is working out. So I got 3.5k, 2.5% to get back, which it's on its way to. Okay, so the Dow's just tapped into that weekly high, which is the 2-week high. It's come straight off that to the pip. Everything's rallying so far, so I'm going to hold this and see if we can get a good run today. Morning, Matt. I thought you named odd, etc. swing pairs at one time. Swing trading, scalping. It's just a form of trading, isn't it? There's no attachment to an instrument. Obviously, something that trends is good to swing trade. Something that ranges, you could swing trade highs and lows. I mean, all swing trading is attempting to pick the top and the bottom of movement. That's what swing trading is. So if you're a swing trader, you wait usually for pullbacks. Usually it's trend trading, isn't it? Swing trading. But trading swings is what position trading is all about. We're trading the swings, aren't we, in the market? So Euro US dollar got in long here because RSI was extended, and I'm looking to play the swing back up. So that's all it is. It's just another way of describing market movement. People that call themselves swing traders, you can swing trade on, I could say I'm a swing trader and I trade the 5-minute charts. Yeah, I'm trading the swings on the 5-minute market structure. Euro US on its way to target, propulsion. No trade on the NASDAQ today. Pre-market range is too tight. Post-market opening range far too big. So 20% of the average daily range is 448. It's put in 650. So it's put in pretty much a third of the ADR of the day in one candle. So it's going to be hard to get onto a profitable trade on that one. Dow's rejected the that weekly level. S&P broken nicely. So talking about swing trading, if you're going to define swings and market structure, it's made up of highs and lows, isn't it? So a swing trader now will be looking for a short entry any point below there, because they would anticipate that if we are going to put in a swing low and now we're going to put in a swing high before we put in a new lower leg, they will be looking to short the market at that point, which is what these propulsion gaps are showing you, is where the likelihood of the swing starting from, because that's where the propulsion move started from. So that's where you would enter if you were swinging. If you were swinging, so it's just reminding me of something completely different. Would the MRA being painted on the pound CAD H1 be a resistance area in your belief? Would the MRA being painted on pound CAD H1 be a resistance area? I'm in long. Yeah, well, that is resistance, definitely, isn't it? So we got a propulsion move there, which was a break of that little range for 3 hours. Market then couldn't get through that level. Tried the next day, failed. Tried the next day, failed. Tried again, didn't get anywhere. We're trying again. Strong resistance. However, there is also strong support. It's just a very tight range. That is the resistance. That is the support of this 4-day range. One of these is going to break. The only person that can tell you is unfortunately time traveling at the moment. And he won't be back until after the break has happened. If you're 1% up, take the 1%. I would. If you're 1% up on that, I don't know how are you 1% up on that? You must be in some serious leverage size to be 1% in profit on a move that big. If you're targeting that, that must be like 3 to 5% or something. That's a lot. How do you split risk? Sorry, one sec. Just taking one of the S&Ps off. We're just tapping, we're just finding some resistance at this level, look, which is yesterday's high. So they're selling yesterday's high potentially here. If we break through this, we're running straight into ADR. So this is getting a little bit exhausted very, very quickly. So I'm just taking some profit on it. The Dow is really struggling as well. Just reducing my target a little bit on the Dow, just in case we run into some resistance there. How do you split risk between all the indices while using the ORB EA? I use 0.25% risk. That's it. Trade whatever indices set up, basically. It's up to you. Basically, with indices, the Nasdaq and the S&P will tend to do a very similar move. So they are usually very correlated. So if you just want to trade one, pick one. Yeah. Doesn't matter which. That moves faster than that. That's more stable than that. Yeah. So if you want to reduce your risk, just pick one of those Nasdaq and S&P. The Dow today is very correlated with these two, but often the Dow will not do the same as those two. So the Dow and either the S&P or the Nasdaq is a good option. But you can trade all three. Just bear in mind, some days you may well get hedged on those two together. Some days you may get hedged on all three. You can never tell what's going to happen. So I've had days where the Nasdaq's broken long, the S&P's broken short, that's hit target, and they've come back and I've stopped out on the second part of the trade. Yeah. Some days they go exactly the same as they do at the moment. Yeah, so these are both rallying at the same time at the moment. This has just hit ADR. This hasn't hit ADR. Yeah. Resistance is in a similar place today. Sometimes resistance is in a completely different place. Yeah, so they do move independently, all of them. So trade as many indices as you want. Obviously, don't forget you've got the Nasdaq and the DAX. Sorry, the FTSE and the DAX as well. For the Frankfurt session. I'm hedged on the DAX at the moment. FTSE was a clean break today. Not very big, but... Dow target hit. Well, it's toying with target. Come on. I'll do it for you. Target hit on the Dow. I'm not having that. Missed me literally by less than a pip. And then now it's starting to pull back. I'm taking that. Just in case. So that's obviously upside resistance. Yesterday's high. just in case it doesn't get through that level. So profits locked in basically on these two. Rajat, can you please explain live on opening range breakout, EA? There's a video explains it on here. This video explains the opening range breakout strategy when it loads. There we go. So yeah, watch that video on that page. I mean, I can explain it again for you, but I've recorded a video, so I don't have to explain it over and over again. When it loads, for some reason, it's not. Okay. Yeah, that explains the opening range breakout strategy in detail, all the settings for the EA, methods, everything. Yeah, everything you want in there. It's 2 hours long. Yeah. So I could go into a 2-hour explanation now, or you could watch that on your own time so that not everybody else has to listen to the 2-hour explanation because they don't need it. RSI2 got me into 3 positions. Good job. Yeah, these are all RSI2 entries. If anybody's got any FX pairs they want to look at, let me know. But there's nothing much to look at today from my perspective because I'm just waiting for something to happen. Euros actually are having a nice little run. I'm really tempted to bank this 500 just to get back some of that loss from yesterday. In fact, I think I'm going to. It's not a lot of money, but I just this loss yesterday was me taking a gamble on the US dollar yen move, and it cost me 1%. So I'm just going to bank 0.6 of that back because they're just easy, straight in, straight out, done and dusted trades. Just in case the US dollar rallies today, and obviously this is all going to come crashing down. So might as well bank those. But if there's any FX pairs you want to look at, let me know. I don't trade gold, Rajat. So I can't show you that because I don't trade it. What are your levels for RSI? What are your levels for RSI and what period? For what? So again, watch the bootcamp. It's all explained in the bootcamp, how I position trade with RSI, but hourly RSI 21, 4-hour RSI 14. So H1 21. H4 14. Levels 70, 80, 90, whatever you want. Up to you. Personally, I'm using, I don't even know what I'm using, to be honest, at the moment. I think I'm using 80 on the hourly. It really doesn't matter. Use whatever you want. Whatever I have is whatever I... Yeah, so I'm using hourly 70-30 at the moment. But if you want to be... And it's a personal preference, basically. 70-30 gets you into more trades. It's great when the market is range-bound and in weak trends. 80-20 is pretty much 100% strike rate. Yeah. It's not often an 80-20 will fail on the hourly. 90-10, you very rarely get a 90-10 extension, but when you get in, you will make money guaranteed 100%. If you wanted to basically make your mortgage, you sit there and you wait for a 90-10 extension on the hourly RSI. And you'll be sitting there for ages, as you can see on these charts I'm going through now. There isn't one. Yeah, but when you get one, you can pretty much bet your mortgage on it and it will play out because a move of that magnitude is caused by something catastrophic in the market and it will get undone. But you will very rarely find one. That's the closest we've had. New Zealand US, that was 83. But 70.30 is a good level on the hourly, 21. And again, speed of RSI, up to you. Yeah, if you go with a 14 RSI on the hourly, yeah, you're going to get a lot more signals. There's no right or wrong. When you get into like I keep saying, doesn't matter how you get into a trade. It's what you do after you're in that trade that makes you the money or loses you the money. Getting in is just literally hitting a button. You can flip a coin and press the buy and sell. That doesn't make you any money. If the market goes your way, brilliant. If it goes against you, what you do next is how you make money in the markets, not which indicator, which level you use. That doesn't make any difference apart from the entry. The entry doesn't make you any money. The entry gets you into your job. Pound US dollar. Just got out of that. Market's pulling back. So going to break even on the second part of those probably. So pound US dollar at the moment, the bias on the US dollar is neutral to bull. The pound is neutral to bear. So you want to be selling it. So RSI extensions to the upside for shorts. ADR hits to the upside. Propulsion gap targets to the upside. For shorts, basically. Drop down lower time frames. Wait for a reversal alert. Short signal. Or whatever you want to use to get in short. But basically looking for shorts at the minute on this one. However, obviously because it's the pound US, the market moves on US news. So this will, at the moment, I'm trading it in either direction, as you can see. So the last 4 trades I've had on this have been longs. There's one there I took a break even on. That one I took a small profit. That one I took a small profit. But as you can see, the short moves are going to be a lot more aggressive. Because we are expecting this pound to drop. And I was expecting today Bailey to come out and tell us when they're going to drop the interest rates. Either it's going to be next month or August, in which case that makes the pound even more bearish. But we didn't get that today. We didn't get anything from Bailey today. Didn't even talk. It must have been cancelled. Due to hold a press conference at the Financial Stability Report in London. If he did talk, he didn't say anything. That's the Financial Stability Report. The financial policy summary, basically, but we didn't get... There's nothing from Bailey. It's Bank of England talking, so... I don't know. Shorts at the moment, though, ideally, but... Equally, if you get a nice extension to the downside, if you suddenly get a 20 extension to the downside or something, yeah, no problem long in it. All these longs are working. But just don't get greedy on the longs. Get greedy on the shorts. Out of both. So clean breaks on those today. So I'm just stuck in my DAX hedge, basically, which has gone absolutely nowhere today. DAX, since the open. So that's the open. Basically, we went up, we went down, we went up. Literally haven't gone anywhere since the open at all. Can't do anything with that today. Upside target on the DAX is that propulsion gap to the upside, so putting in a lower high. Downside target, that support, but it's just not able to get anywhere today. So going to lock that hedge loss in by the looks of things. Afternoon, Hussein. Can you suggest a book on ORB strategy? No. Or a more in-depth understanding of concepts like expansion and contraction? No, I don't know. ORB strategy is literally very, very simple. It's the opening. This video explains it in detail. You won't get any better explanation than that. I think it might be on the strategies page as well. Yeah. It's when you say in depth, there's a market, there's an open, yeah. That is the opening range. That candle. So the first candle at the open, whether it be on the 5-minute or the 15-minute chart, is your opening range. What you do is you take a breakout of that. It's really nothing more complicated than that. Yeah. That's it. Look. There's a load of information on the website. Yeah. There's your opening range. There's your breakout. That's it. It's so simple. There's nothing complex about it. Expansion and contraction is just where the market does a range and then it gets bigger. But I don't know how that helps you. You have to understand, with anything to do with what you're talking about there with expansion and contraction and things like that, all that is the market basically not having as much volume or having loads of volume. Not much volume is caused by either not much demand for orders or no news catalysts. Expansion is caused by a news catalyst, a fundamental shift, or a requirement for more transactions. Yeah, it's completely random, cannot be predicted, and there is nothing that is cyclical about it. Yeah, if you look at any chart, there is nothing pattern-based around that thing there. Elliott wave, Tony Cribell, who you've just mentioned there, yeah? So narrow range bars, yeah? So NR4, NR7 patterns, yeah? All he's doing is saying, if I have a load of candlesticks, right? And then I have a candlestick which is smaller in range than the previous 7 candles, take a breakout of that. Yeah? That is just a setup with a completely random outcome. There is no advantage to NR7. It doesn't work for a start. Oh, it's test. Hang on. I can show you. Hang on. What is that? Euro New Zealand. So I'm just doing a test. Ooh, that's a biggie. 1621. 1621. 21. 60. Just get this in the spreadsheet. So narrow range. So I've got an EA built for narrow range. Yeah, so this is narrow range 7 strategy. So all you do is you wait for a candlestick, yeah, to have a range lower than the previous 7. So you take the range of those 7 candlesticks, right? And if that is lower than the previous 7, yeah, you basically take a breakout of that, right? So here we went with a long order. Why was that taking along? Oh yeah, the next day basically, isn't it? Or is this might be using a moving average filter? Oh yeah, this one's using a moving average filter. I can't remember what I did with the EA. But basically, regardless of what has happened on this candlestick here has absolutely nothing to do with the next candlestick. So if you've got my symmetrical triangle indicator, for example, is a great example of it. Yeah. So you get a contraction in price, symmetrical triangle. Yeah. It will now break. It has to, because it can't contract indefinitely. So you will, after a period of time, you will get an explosion in price for a reason, a news event, a fundamental shift. A bank has to execute a huge order, whatever it may be. It will then do that, or it will do that. The fact that that has formed does not help you predict the future movement of price. What it does is it tells you that something's coming. After it's done that, it could do that and then go into a range. Or it could go like that and explode away. Yeah. The odds are 50-50. It's irrelevant, isn't it? Every candlestick, all these price pattern systems and strategies out there. Tony Crabell's got lots of them. Larry Connors has got lots of them. There's loads of them out there. There's loads of these patterns. Elliott wave, don't even go there. Nonsense, utter nonsense, a lot of it. Because what happens is you go, oh, look, there's an A, B, C pattern. Okay, we're going to go short because it's an A, B, C short. Oh, it's gone up. Why has it gone up? Well, because there's a 50-50 chance of it going up or down. Just because you've had a movement up, a movement down, and then a movement up has absolutely no relevance on the future movement of price. Because when you had the 1, 2, 3 and you had to go short because the pattern told you to, the US dollar CPI went up and that thing shot 300 ADR up. Why? Because the US dollar CPI went up. It's got nothing to do with the bloody pattern on the chart. It's irrelevant. All this stuff is useless to you. It's happened. What's going to happen next? Is the candle after this one going to be a bull or a bear? I don't know. You don't know. But how are you going to make money if you don't know? You can't. You have to get in the market, wait, and then deal with it. If you go in long here and the next candle goes long, 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 take your money. If it goes short, 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 get in again, change the price and get out up there somewhere. Yeah, it's a bear candle. Should it be a bear or a bull next? Yeah. If it's a narrow range bar, narrower than the previous 7, what has that got to do with anything anyway? Just because there's been a narrower range on this day than there was on any day in the last 7 days has got nothing to do with anything. Why is it quiet? I don't know. 3 people didn't come into Barclays this morning, so they haven't done many orders. What's that got to do with the price of the next day? Nothing. Yeah. So it's just pointless. All pointless. The way you make money is by basically riding the train. Yeah, you get into a trade for whatever reason. You can use narrow range bars. If you want to use Tony Crabell's stuff, the NR4, the NR7, fine. Get an NR7 set up. If it breaks long, go long. Yeah, but what happens after you've gone long is how you make money. You don't make money because there's been a narrow range bar, narrower than the previous 7 bars. That's not why you're making money. You're making money because it's gone in the direction you wanted it to, and you've either taken the money or you've let it run and it's gone further and you've taken more money. If it goes up and then it comes back down again and you didn't take the money, you're now at break even on it. Your decision is, should you go with a break even or should you hold it and hope it goes up again? If it goes down, what you do now is why you make money or lose money. So if you enter another position and then it goes up and you have an average you can get out of and you make money, you make money. If it goes down, you lose money. So what do you do next? It's all about planning the trade. Yeah. You can only plan an entry based on a criteria. A condition is met, a signal is achieved, an entry is placed in the market. That has nothing to do with making money. That, a reversal alert, doesn't make you money. What makes you money is whether the market goes up or down in the direction you've pressed the button in. There is no system or strategy on the planet that can tell you what's going to happen. Doesn't make any difference, does it? Same as I keep saying, which RSI? You know, people ask all the time. There's nothing wrong with asking the question, which RSI do I use? I use the 21. Is it the right one? I don't know. It's what I've settled on. And should you use the 70 or the 80? No idea. Sometimes you should use the 70. Brilliant. Sometimes you should wait to the 80. Brilliant. Sometimes you should maybe take a 65, like there. Missed that trade because I wasn't trading the 65. Maybe I should trade the 65. They all make money. Sometimes they all lose money. Sometimes what makes you the money is what you do after you've pressed it. So learning contraction, this is a long-winded answer to your question about expansion and contraction. Forget it. It's irrelevant. if you want to learn about it because you want to identify whether it's doing that or that, fine. But how is that going to help you? So if it's like that, what are you going to do? That's what you need to know. So if you identify an area of contraction, and how you define contraction is going to be you, not me, because your definition of contraction and my definition of contraction are going to be different things. That to me is a period of contraction. Then it expanded and it went into a crazy. What do you do there? For me, nothing, because the market hadn't moved. When the market's doing that, I'm sitting waiting for it to do that. When it does that, I'm getting in. That's my way of trading. But your way of trading might be looking for those and then taking a breakout, becoming a breakout trader. That's fine. But bear in mind, the market only breaks out 20% of the time. 80% of the time it does that. That's what you should be doing, trading those. Because that's what the market spends its time doing most of the time, isn't it? But I don't know of any books that are good on it. Google is the best book you've got. OpenAI. Go and ask OpenAI for a explanation of expansion and contraction in foreign exchange markets. It will go off and it will find out all the information you need and just plonk the whole lot on the page for you. It's probably the best thing you can do right now. Brilliant at doing stuff like that. How is your RSI2 H4 testing from yesterday going? It's still going. You just saw me do one. So that was the Euro New Zealand. I'm still going. These tests take 2 hours each. Next one is Pound New Zealand. But it's going very well. So Aussie CAD, 1600 out of 2000 passed. Aussie New Zealand, very bad. Aussie New Zealand really never does well at all. I don't know why Aussie New Zealand, because it's really range bound, but it doesn't seem to perform well on anything, to be honest. But yeah, 300 out of 2000. Aussie US passed 1800. CAD Swiss, I just wanted to test some Swiss, but I knew the outcome. 400, not very good. Euro Odd, 1900 passed. 2000 passed on Euro CAD. 2000 passed on Euro Pound. 1600 Euro New Zealand. 1300 Euro US. Half on Pound Odd. Seems to be the odd isn't performing well for the last decade. Pound CAD 1700, Pound US dollar 1900. It's just doing fantastic, basically. Overall, there's a vast majority of the tests are coming out very, very, very high. So yeah, it's looking really good. But obviously, there's a lot more testing to be done. Once I've run these tests, I need to go through all the data, basically. But it's looking really good. This is all Position Trader EA based as well. So, but 4 hour, with the 4 hour charts, what I'm finding obviously is there's a lot less trades than there was on the hourly. So the drawdown is more manageable on the 4 hour. So I think it's a case of, if you want to be aggressive, use the hourly. If you want to be a bit more conservative, use the 4 hourly with the Position Trader EA. But there's some amazing results. Aussie US, return on drawdown, 11. Returns 68 grand off of a 5k drawdown. So it's an 8% drawdown on accounts. It's a 50k account. And it produced 64 grand. This is 4 years testing, not 10. I've got to go and run all these tests over a decade as well. When I've picked a set file, basically. But yeah, looking good. Really good. Why is that only done one test? That's because I'm using the Price Action Toolkit, not the Position Trader EA. Okay. Idiot. Sideways market, this strategy gets a beating. What in a sideways? Because in sideways markets, this strategy gets a beating. What strategy? Tony Crabell's one? Yeah, it will do. I mean, basically, a range-bound market. the thing you've got to think about, especially with Tony Crabell's work, I've tested all of his stuff, right? There's people out there that go, this is brilliant. I couldn't make it work at all. At all. I test it all on FX pairs, but all these people trade indices, yeah? So there's no point in applying multiple strategies to the same index, yeah? Pointless. If you're going to trade a strategy on the S&P 500, use RSI2 and just set it on autopilot to go long only, and you will make money. Simple as that. Trouble is, you can only do it on the S&P 500. So it's not going to set the world on fire. It's not going to make you a millionaire unless you've got £1 million in the bank. You're probably not going to get enough return out of it. Or you're using high risk, which obviously could blow the account in a bear market. But all these strategies like Tony Crabell's NR7, NR4, all those sorts of things work really, really well occasionally. They're like breakout trend strategies. Strike rate is fairly low on them. The reason you're getting a signal is because the market's in contraction. There's a reason for that. And it's probably going to stay in contraction, which means that you'll probably get stopped out because the market is in a range and contracting. Yeah. Just because you get a signal which is narrower than the previous ones doesn't mean tomorrow it's going to go. It means it's narrow and in a contraction, which is why breakout trading is so difficult, because ranges are never even. Look at the US dollar CAD at the moment. Great example. So this is the range. That's the range high. Became the range low. There's your range high. There is another range high. There is another range high. And another range high, yeah? Which of the range highs do you take a breakout on? Where do you class the range as? Where are you going to put your pending order for the breakout? Put it down there? It may do that and not trigger you. It may do that and trigger you. You're stopped out. Yeah, if this thing's going to stay range bound, as it has done since April, you're just going to get murdered. However, if you're a position trader like me and mean reversion trading, I was long there, I was short there, I was long there, I was long there, I was short there, I was long there. There's a trade in there, there's another one there. You know, I've just been milking it because 80% of the time the market's doing this. Strategies like the NR7, NR4 are breakout strategies. Yeah, the market doesn't spend much time breaking out. It spends most of its time going sideways. So you don't want to be doing those strategies because you're going to lose. There's a video on my website on here about mean reversion versus trend trading. This one here, which should you be doing, which kind of explains it. So same thing, trend trading, breakout trading. It's that versus that or that, basically, and why it's better to do mean reversion. So if you got Tony Crabell's strategies and actually instead of going the way you should be going on them, go the opposite way, you'll probably find you'll actually make more money. You said one needs 3 strategies, range, breakout, and trend. Which would you suggest? I think I've probably just answered that. In an ideal world, you would have 3 strategies running, yeah? So you would have a range strategy, which basically just sells highs and buys lows. You'll have a breakout strategy, which identifies an expansion, propulsion gap, basically, and then will trade in the direction of that propulsion gap as a breakout, and it will take a profit. And then you'll have a trend, which will identify the same move, yeah, but will add into that to build a position. Yeah, that would be absolutely ideal if you could find 3 robust strategies. The trouble is, the definition of a range, a breakout, and a trend is completely discretionary. So there isn't something that you can define in a set of rules for those. You can pick a set of rules. So you could say, after a propulsion gap, if there is a pullback of 50% to 70%, I will short the market when I get a bear candle, you could say that is my trend strategy. I've tried it all. It doesn't work consistently enough because you need to be able to eyeball the markets and identify market structure, because market structure is never the same. This is beautiful market structure on this chart here. Look at it. But how do you define it? Even I'm having trouble defining market structure. But it's a high, a low, a lower high, a lower low, a lower high. That is a lower low. That is a lower high. But I would class that as the lower low and that as the lower high. But even I can see two different variations of the same thing on the chart here. I could do that, or I could do that. Same thing. You know what I mean? It's very difficult to... This is why people struggle with strategies, because it's very hard to understand strategies most of the time, which is why position trading works, because you get in, you wait, you see what happens. If it works, you take the money. Yeah. Got in yesterday on the RSI extension to the downside. It went up today, so I took it. Really hard. If it had gone down, I'd have added one and waited till it goes up, and then I'd took it. Very, 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 very simple to be a position trader, isn't it? You just need a condition indicator, a signal indicator, and you wait. That's it. But most strategies require set mechanical rules, which you've got there. Look, high, low, lower high, lower low, lower high, lower low. This is the lower high. That is where you would take your short from. But should you take your short from here because it's a 50% retracement of that move, or should you take your short from the propulsion gap? Which one's right? Both, if it works. Both are wrong if it doesn't. But what do you do afterwards? This is the thing, you know. So there's many, many ways to trade a breakout, a range, and a trend strategy. If you have all three, it doesn't matter what condition the market's in, one of them will be making money for you. As long as the risk, and this is where it works really well if you're using stop losses, as long as the risk to the downside is kept at a decent level and you let your upside be profitable way more than your downside, you'll make money. But breakout strategies often fail. Yeah, there's a breakout. Short. Whoops, there was my stop loss. Oh, okay, so we'll go long. Whoops, there was my stop loss. Okay, we'll go short. Where's my target? Well, that's my stop, so it's down here somewhere. I've been sitting in this for 8 days now. Haven't hit target, but I've had 2 losses. Doesn't work, does it? Very hard. My trades were going very poorly when I attempted to utilize these playbook strategies, i.e. candle patterns. Yeah. But it's random, and this is what I keep saying. This is totally and utterly random. Everybody spends their entire life trading, learning strategies, reading books, trying to conduct a strategy that puts this into order. There is no order. Not 2 days are ever the same. There is never the same candlestick patterns 2 days in a decade. What happened yesterday, this order of candlesticks, has never happened before. And it will not happen again. So how could you possibly develop a strategy that is based on movement? It's all rough. Sometimes it pulls back 38, sometimes it pulls back 50, sometimes it pulls back 42.5. Sometimes it will pull back 57. Sometimes it will just do a little flag break of about 15% pullback, and then it will go. Sometimes it puts in an A-shaped recovery and takes out that high, then it pops down there and it comes all the way down there. Sometimes it does that and it flies off to the upside. It's all random based on how many orders the banks have each day in each direction, which is totally random. Yeah, there is no order. You cannot put order into something that is chaos. And every book, playbook, and strategy will tell you to do the same thing. Look at the opening range breakout strategy and the SIH strategy. Some days it's absolutely beautiful. Today, bang, straight up 2R, pulled back, I got out, and it's going up again. If I'd have known it was going to go up again, I wouldn't have done that. But if I could see the future, I'd be a multi-billionaire and I wouldn't be sitting here, would I? But I can't see the future. So you have to have a strategy that says, when this happens, do this. Otherwise, you know, but I'm trying to trade chaos. I have no idea where this is going, and neither does anybody else. But we do know support and resistance levels are often used in the market. So all you've got to go on is where it's been before, and the propulsion moves. Propulsion move up, added more position size. Yeah, we know that happens all the time, don't we? But apart from that, there's very little else we do know. Risk management and psychology after you press the button, yeah. Psychology is the hardest part, which is why if you position trade, you don't need it. And this is why the bootcamp is all about removing what doesn't work as a trader. And the thing that doesn't work as a trader is this. Yeah, you are programmed to take profit. Yeah, every single thing here is why people fail, and every single one of those is to do with psychology. Fear of missing out, system hopping doesn't work. I need to find something that does. Trying to pick the top or the bottom because I want to be right. These are all psychological problems that you have ingrained into human beings. Taking profits too early, not being able to hold on to your winning trades. Yeah, all of this stuff, moving to break even because you're scared. Psychology, it's all to do with psychology. Remove the stop loss out of the equation, every single one of these is removed. Psychology doesn't come into the game anymore, does it? Those two trades I just banked today on that pound US and that euro US, my reasoning for taking the money was not anything but I had a little loss yesterday. I need to get some of that back. I have no idea if this is going to do that next or if it's going to do that next. But what I do know is I can take that 550 and I can go and spend it on a meal. Yeah. And if it does go down there, it's not a problem because I can work my way out of the position. But you just don't know which way it's going, do you? And every single system and strategy out there tells you you've got to conform to this because this works. No, it doesn't. It's never worked. If it did work, you'd be showing me your P&L. In fact, you wouldn't because you would be sitting on a beach. It doesn't work, does it? The guys sitting on beaches are selling you courses from the beach, but they've only gone on holiday and they've got someone with a video camera to pretend that's what they do with their life because they sit there and they work for half an hour a day. I've been back testing this strategy now for 2 weeks. I'm not sitting on a beach and I still haven't come to a conclusion about it. That's what real life is about. Oh, here we go. Oh, I was expecting a cockapoo in that, Brian. 50-50, your choice. Nice crystal balls. John Wick's gone to Hogwarts. That's another one to save. Have we not got a John Wick crystal ball? Yeah, we've got loads of John Wick crystal balls. I like that one though. Don't you just hate it when you save something from Telegram and it doesn't appear where you're expecting it to? Where did that go? Oh, it did go to the desktop. A big desktop. It's obviously not gone to where I thought. Oh, there it is. Ah, barrier man. Poor old barrier man. There's a lot of people that are new to the stream today thinking, what the hell is this guy on about? Standing jokes, risk management. Thank you for the useful advice. So you mean it's not just about entering trades, but how I handle them by adding to winning positions and scaling out? No, totally the opposite, Hussein. Go and watch the bootcamp. You can do. If I have no problem adding to a winning trade, yeah? But my argument for that is you only do that usually in trend trading, right? So if this trade on the screen here, for example, okay, your job as a trader is to make money. Yeah. Courses and mentors and gurus and the guys on YouTube focus on strike rate. Yeah. Because if you can get it right more than you can get it wrong, you'll make money. Yeah. This is what the world is fixated on, strike rate. To have a strike rate, you have to have a loss. Yeah. So your strike rate is the difference between your losing trades and your winning trades. Why do you think you need to have losing trades? Who told you you needed to have a losing trade? There's no bank or institution on the planet, I can tell you this now, has losing trades. Yeah. What they do is they scale in and out of market movement. Yeah. They don't take a loss just because the market didn't go the way they thought it was going to go. They will wait until it goes the way, or they will make it go the way because they can. But everything focuses on strike rate. So adding to winners is great. So if you go long here, as I did, and it pushes up to there, what you're saying is I wait for it to pull back to add another position. Yeah. But it then came down below my initial position. So what do I do now? Take a loss on 2 positions. Not very good. Don't forget, market spends 80% of its time doing this. Yeah. Trend trading, if it goes up and it pulls back and you add another position and it goes up, fantastic. Stick a break even on that, maybe a break even on that. And then maybe when it pulls back, add another position there. Yeah. If you can get that to work, brilliant. You'll make a lot of money. 90% of the time, though, you will not get that second trade on because it will hit a double top and come back down again. You'll get scared out. You'll close the position and then it will fly and then you'll get cross. Psychology, again, because you're using orders that tell you to get out of the market with losses. If you get into the market with a position like this one, yeah, so I went long there and the market went down. Because I was wrong, I went long again and the market went up and then I got out. Much easier, isn't it, to be wrong and then be right than it is to be wrong, take a loss, wait for the market to come up to where you took that loss, make you cross, hit the long button again, then the market goes sideways and moves down and makes you cross again because you take another loss. Why do it? It's pointless. You just have to control risk and look at risk in a different way. So if you watch the Bootcamp, it will show you how to scale in and out of moves. And it's not about being right and being wrong. It's about making money. I made money today. I made money the day before that, the day before that, the day before that. I had a losing day because I took a stupid trade on the US dollar yen. And I used a stop loss. Yeah, I only use stop losses on things like the US dollar yen because it's unpredictable. But if you try and scale into your winning positions, you'll make a lot more money if they go your way. But most of the time, what will happen is when you get into a position, let's say you were longing this, right? Let's say you went long there. Market moved up and then it came down and then you added another long position there, right? When the market pushed up to there and then came down to there, okay, instead of you having your entry there, by adding that position, you changed your entry price to there. So a winning trade, you didn't take profit on it, you added more size in, and now you're at break even. It's been 2 days, you've got 2 positions on, and you're at break even. What's going to happen if it comes down is you're going to get 2 times the loss. You will get scared and you will not let that run 90% of the time. On paper, in books, in courses, on videos, looks easy. Try and execute it. It doesn't work because your psychology won't let it. But it's much easier to go short, be wrong, go short, be wrong, go short, be right. Because when the market's pushed, it will pull. Because what does the market spend all of its time doing? Yeah. So if you get in short there, and you get in short there, and you get in short there, you know for a fact it's coming down because they will have needed to take profit on the move they just created. Get in and out on the waves. Don't do anything other than that. That's all you need to do. If you get in and you get in again, and then it comes down ridiculously fast and hard, and your average price is there, if you want to, move break even on those 2 positions and then add another one there. So add in once you've established the position, but don't get out of the position until it's in profit. And certainly don't add if you're going to put a break even on it, obviously you can add to it when it's break even. But I mostly trade indices, and I've watched your position trading bootcamp, which focuses on averaging. Yeah, while the strategy may be effective in Forex, I trade indices like the US 30. So what do you do in the US 30? Can position sizing work for what you mean? Position trading work for all? So indices, if you want to position trade indices, just long only, because they just go up, don't they? So if you want to position trade on the S&P 500, just go long. Not a very good chart at the moment, but yeah. So just just long it, because they're manufactured to go up. That's all Warren Buffett does. That's all Larry Connors ever did. That's all the Turtles ever did. They just buy it. Yeah, Warren Buffett still does it to this day. It comes down, you buy it. Comes down, you buy it. Comes down, you buy it. Every time it comes down, you just buy it, because it will go up. Because if it does, I've explained this many times, but stocks go up. If they don't go up, board members get sacked, replaced with board members that make stocks go up. Because if stocks go up, businesses go bust. Businesses don't go bust, so stocks go up. Therefore, stock price will rise every year. I haven't got much data on this chart, but yeah, there's a weekly chart going back to 2015 down there. So this is a decade. It's gone up. Where we are here in 10 years' time, it'll be whatever it'll be, but it'll be up here somewhere. So we'll be in 10 years' time, we'll be trading somewhere in the region of 7,000 to 10,000 on the S&P. Just keep buying it. So buy it. If it goes down, buy it again. If it goes down, buy it again. If it goes down, buy it again. Wait till it goes up and then sell it. Your job as a position trader is to survive that, which means your lot size has to be small enough to survive a high drawdown. That's all there is to it. So you just need a system or a strategy that ideally measures market movement, which is why I use the RSI. And the RSI works on everything. It works on stock indices as well. So I use this because this tells me when price has gone up and gone down. I can see on the chart when price has gone up or gone down, but I'm interested in how quickly that movement is. So when something comes down fast, it tends to be overextended, and you run out of buyers in that case that want to buy the market. So therefore, the market exhausts itself and has to undo either a portion of the trade and start a new leg, or all of the position. So the relative strength index is telling me when exhaustion points are hit. Yeah, that's why I use the RSI. But you could use any oscillator, because all oscillators are doing is mimicking price movement, and they're just using different metrics to mimic what you're seeing on your chart. This is just delaying what is happening here. So everything that happens here has already happened there. Every indicator is telling you what's happened in the past, which is why no indicator is any use for predicting future movement. But if you can identify exhaustion in the market, you know that there is a mean reversion move usually coming, which is why RSI2 works so well. If you look at a daily chart and you look at 2-day movements, usually after a 2-day movement, you have some kind of undoing of the 2-day move. You get a 3-day move, you get a little bit of an undoing of it. In that case, there was 6 days, 1 day down, but then we got the undoing there. This is after an intervention, so it's not a great example, is it? And it's the US dollar yen, which is a terrible example. But yeah, there's a strategy, well-known strategy called the 3-down day, which is, again, a stock. All strategies you will find out there, yeah, that everybody is teaching you for the Forex markets, none of them were developed for Forex. They were all developed for stock indexes and stock trading. Yeah, Wall Street trades stocks. Yeah, banks and institutions trade Forex. Pension funds, hedge funds trade Forex because they're hedging usually transactions. Yeah, so if you look at any chart, you'll find not often you get 3 days in one direction before you get an undoing of that move. 3 up days in this case, undone. 5 down days, undone. 3 down days, undone. You've got 4 down days, undone. 3 down days, undone. 3, couple up, down, yeah. So RSI 2 is measuring the relative strength over the last 2 days. So if you've got 2 days solid, hard down in one direction, you get really extended. There's a very high probability, 80+% chance, that the next day will either be an up day or at least a candlestick like that, where you've got a spike and then a retracement. Yeah. So if it's gone down like that and you get the spike is big enough for you to exit a position. If you do want to exit the position. But if it comes back down again, obviously you miss your exit, don't you? Which is why RSI 2 is such a good indicator to use on any time frame, but I mean mainly daily, because the market can't sustain rallies for long in one direction without having to do at least usually a 50% retracement. Fibonacci. Yeah. Again, fibs, best thing on the planet. Yeah, I talk about fibs in here all the time. I'm always saying, you know, people are saying, where's price going to go? Don't know, but if it pushes down, it's probably going to pull back 50%. What's it going to do? Probably pull back 50%. Look for a propulsion gap around a fib level. Yeah, pushed down, pulled back 50%. Good time to get out of longs, good time to enter shorts. But it could be 38, 50, 61.8, 71.9, could be anything up to 100%, couldn't it? Which is why people that try to trade Fibonacci never get it right. They give up with it and move on to something else because they're trying to trade that one. That doesn't work enough. That one doesn't work enough. That one doesn't work enough. But what you've got, if you combine all of them together, is a bloody good strike rate. Short that, if that doesn't work, add another one, and wait for it to come back down again. You'll have made a load of money. So take a fib strategy you've learned in the past that didn't quite work, turn it into a position trading strategy. Bang. Suddenly you've got something that is profitable. But it's not profitable because of the strategy. It's profitable because of the way you're trading. Not because of the strategy, because you're position trading rather than stop loss trading. They all work, but they all don't work. That's the difficult part of trading, isn't it? Sitting in drawdown is where you spend your entire life. Thanks for golden nuggets, no problem. So basically, I'm stuck in the hedge on the DAX at the minute. That's all I've got on today. And it's just, see again here, look, prime example. Propulsion gap. Didn't quite make the propulsion gap, but it did fill that one. So should I have taken the top of that propulsion gap? In this case, yes. But tomorrow it could have done that and then done that. Differences in price are so infinitesimally small between getting in and out. It's, you know, this is where the randomness comes from. It may well push back up to there today and hit that target, which is great. And then I'll get out, but stuck at the moment. AZ, your message just disappeared. I was just about to read that. So that's really all I've got for today. Just waiting basically for market to move, really. We've got a bit of a intraday day today, so there's not really any ADRs. We're just flip-flopping around. News-wise, we've not got a lot else coming this week. So tomorrow we've got CPI for the yen. Ordinarily, I would say that won't do anything, but obviously with the yen at the moment being talked about intervention again by the Bank of Japan, you never know, they could use that to inject a load of orders or liquidate a load of bonds and fly. So that might get some movement tomorrow. We'll have to wait and see. We've got Biden speaking. We've got the CPI preliminaries, which are irrelevant, really. They just forecast. And we've got the GDP and PCE for the CAD. So not really anything exciting at all tomorrow. Those are your two main news events, which are an hour before market open. But other than that, there's not really a lot else happening. So the only thing that will potentially happen tomorrow is the complete end of quarter, end of month sell-off. So there's a good chance that we'll get a big rally at some point tomorrow. So if we do get early ADR hits during London, you're probably best to ignore them because we may well get some big moves coming in. So obviously, we know the market moves in monthly and quarterly cycles, which is what these moving averages are, your monthly and your quarterly moving averages. So markets report in quarterly moves. So they need profit on the table at the end of each quarter. We're coming up to quarter end tomorrow. So we may well find they liquidate a load of orders to get a load of profit in the bank so they get paid. So we'll see what happens, but it all depends on their positioning. This is the first quarter for the last year that we've had interest rate change in Euro and CAD and Swiss. So it may well be that the moves that we've had are in line with normal market movement because of the interest rate changes. So we may not get any movement tomorrow, but we'll wait and see. Obviously, we don't know. We'll have to wait and see what the market decides to do tomorrow. But so far, there's no real clues as to them wanting to do anything at all, is there? So sitting and waiting. Not sure why it disappears. I was going to say next month I might turn everything to button trading only mode and enter positions based on whatever I think might happen. Yeah, nothing wrong with that at all. That's what the position trader EA is for. The only reason I use the RSI is because I need a system or a strategy. And I want something that is completely hands-off automation to get me into the market. And I know the RSI is a good indicator of extended conditions. That's it. So it's not the best indicator in the world. Your eyeballs are the best indicator in the world. If this thing comes up to here tomorrow, yeah, and you see a whacking great bear candle go in, hit that button. It's a lovely support resistance bounce. Double top at propulsion in a downtrend on something that's dropping its interest rates against something that's going to raise its interest rates. Best sell in the world, that. But if the RSI gets to there, I won't be shorting it. Hit the button on it. Nothing wrong with that at all. You've got as much chance of hitting the button manually and the RSI not being extended to the RSI being extended and me getting into it automatically. Doesn't matter, does it? When that bear candle goes in, the next candles are either going to do that or that. If they do that, the position trader EA takes you out, takes over and scales in for you. If it goes down, get out when you're in profit. I keep saying there's no right or wrong way to get into the market. All a trade entry is a set of rules and tick boxes. Is RSI extended? Yes. Have we got a reversal alert? Yes. Is there a previous resistance? Yes. Have we got divergence on RSI? Yes. That is a 5-star trade. If we didn't have divergence, it would be a 4-star. If we didn't have a support and resistance, it would be a 3-star. Is that better than that? No idea, because the next candlestick could be up or down. Doesn't matter whether it's a 1-star, 2-star, 3-star, 4-star, or 5-star entry. The next candlestick doesn't know there is a star system. Forget it. It's irrelevant. All these guys that teach you these courses where that's going to work only if there's this because of that. That irrelevant. Doesn't matter. The market doesn't know what divergence is. They're not watching it. I aim to make 1 to 2% on my FTMO funded account. Could you recommend any EA for me to begin with? No, because they don't allow you to use EAs. Seriously, you can't use EAs. So, no. Off topic, just to be transparent, I have stepped away from trading with Apex. Situation has become a little questionable, is it? Giving them a month to get their act together. Why? What have they done? Jumping over to Top Step and Take Profit for the time being. Yeah, Take Profit Trader, to be honest, I think is better than Top Step now. Top Step as well. I think Top Step have moved away from Tradeovate. There's a lot of problems with Tradeovate and Prop, but I don't know. I might be wrong on that. But yeah, Top Step. But Apex are a bit, have always been pretty good, but payday's always been hard, which is where Take Profit Trader kind of trumped everybody. They came in with the, hey, draw your money out whenever you like scenario, which is fantastic. Yeah. I'd be worried about all prop at the moment. They're all in ever so slightly hot water, aren't they? Regardless of whether they're futures or not. You know, the CME feed is the CME feed. So the one thing they can't do is manipulate data. However, it's all about the rules, isn't it? Payouts and their way of presenting themselves as a business is questionable. I haven't been paying any attention to them, so. RSI2 long only on indices looks pretty good. Yeah, that is the strategy. That is the original strategy. That is what it was developed for. Because indices go up. That's it. You know, you just basically use the 200, or if you want to be a little bit more conservative, use the 100 moving average, and you only go long. If it's below the 100 or the 200, you don't get in. If you look at the I haven't got 200 on that. You know, if you stick a 200 moving average on it, you look at the bear market, you would have taken quite a lot of losses before you got below the 200 moving average in that bear market that we just had. So even that isn't infallible. Like I say, you can't predict the future. So whatever indicator you use is lagging. The 200-day moving average is telling you what has happened in the last 200 days. That has absolutely nothing to do with the next week, month, quarter. Yeah. If it takes the 200 moving average is coming up under price, and price is up here somewhere, and price drops for 5 weeks, and then it gets below that 200 moving average, your system goes, can't take any longs. Damn right. You couldn't take any longs for the last 5 weeks. But because the indicator is lagging 200 days, useless. Moving averages are the most useless indicator available to man. Yet there are so many systems and strategies that rely on them. Unbelievable. Let's use an indicator that lags price 50 bars ago. What was happening 50 bars ago on average? Who cares? What's happening in the next candlestick? That's all I'm interested in. FTMO does allow EA trading. I've been using one EA already for gold trading. Yeah, you have, but you haven't been paid. Look at their terms and conditions, Silver. You can use them in your evaluations, no problem at all. But as soon as you get funded, they will want the source code, and they will need to verify that the trades taken by that EA are not being taken by any other trader within FTMO worldwide. And if they are, you can't use it. Trust me, I know people that have had it happen to them. It's in their terms and conditions. Read it. If it's your EA and it's yours alone, you've coded it, you've built it, it's your strategy, no one else is trading it, absolutely fine. But if you buy an EA from the marketplace and you cannot provide it, you cannot use it. Unless they've changed the rules, but they haven't, because I read the terms and conditions last week when I started my FTMO, and it's still there. Okay. And they've never let you use EAs. They've let you. This is, you know, we've been through this many times. They will let you do what you like in evaluation stage 1 and stage 2. And when you get funded, you do what the hell you like. When you ask for a payment, they will go, what can we catch this guy on? He's used an EA. There you go. Terms and conditions, rule 5.4. Could you provide the EA code, please? No, I bought it from a prop firm passing company for $1,000. Sorry. Yeah. It would have taken you 2, 3, 4 months to get to payout stage because you would have failed evaluations, given them a load of cash, got through to payout stage. Finally, and you're going to get that $3,000, although you've paid them $7,000, they're going to get that $3,000 payout. And they're going to turn around and go, no, you've broken the rules. Did you not read the terms and conditions? You signed them. If you've been paid, fair enough. But I can give you a list as long as my arm of people that have been caught doing that and they don't get paid. Why do you think I'm trading this 100% manual? Yeah, no EAs here. I'm pressing buttons. This button up here, I'm pressing that button and that button. And I'm manually dragging this line up and down. Yeah, I have no TP, and I'm right-clicking, and I'm clicking close. So as random as you can possibly get. But I guarantee you, they will still get me, because look at my exposure on the CAD. They will turn around when I request my first payment and say, in stage 1 of your evaluation, you were one-sided trading on the Canadian dollar with 5 exposures. And I will go, so what? Have you not read 5.4 in your terms and conditions about one-sided trading? I'm sorry, we can't pay you. Read it. Don't be fooled, people. They're all out to get you. I did not know FTMO delays. So yeah. Brian, you've got to move to Europe so you can trade FX with mad leverage. Yeah. Yeah. If they take that away, I'm going to be in big trouble. Look at that. Miss my TP on the DAX by that much. That's the difference between an exit, profit, a hedge exit, profit, a great day. That is the difference between a great day and a bad day. That is random. I'm planning a holiday to Europe next year. Maybe I need to look for a place. I'm just trying to think what you need either a passport or a driving license when you sign up with a brokerage, and you need a utility bill. And so your passport and your driving license are not going to have the address in the UK on. I was just thinking, if you rented a flat for 3 months in London, like the cheapest, smallest, not in London, obviously in Yorkshire or somewhere where it's like £200 a month. If you rented something for 3 months, got utility bills, you could present that as your address. But your passport and your driving license, of which you have to have one or the other, they won't have the right address on. So yeah, can't get you around that one. Harold, don't stay in the south, proper rough. Come up north. We'll make you a cup of tea. Yorkshire tea, lad. Where it's done proper. You might come. No, come down to the south where we all talk properly and we all have lots of wealth. I love York. It's brilliant. Why are you trading manually since you are the only VAs you have built? Because I'm a trader. I'm not here to sell you anything, Liberty. I'm here to make money. Yeah, I build my products so that I can trade with them on my accounts. If a company doesn't let me trade with them on my accounts, I use my other products. So I am using my products here. I'm using my Trade Manager dashboard to measure exposure and keep track of my positions. I'm using the RSI dashboard to signal entry criteria, and then I'm pressing the buttons, which is basically what I built an EA to do. I built an EA to monitor this and automatically press that button for me, then watch all of this information over here and press the close button for me. The EA just does what I have been doing for 15 years automatically. So if a company like FTMO says you can't do it automatically, I go back to how I used to do it, which is watching this dashboard go ping. Yeah, look, watch this. I need to go short US yen, short US Swiss, long New Zealand CAD, long New Zealand US, short pound yen, long pound CAD, and short CAD yen. Ta-da! It's trading. That's it. That's how it works. Don't tell anyone about ex-chief offers 500 to 1 for US clients. Don't tell anyone about the ex-chief. What's that? Who's ex-chief? Never heard of these guys. Yes. – 2013. They've been around a while. Where the hell is that? Where's Fomboni? That's where they are, guys. On the Comoro Islands. Off the coast of Africa. You want to put your money there? Okay. Up to you. I wouldn't want to stick my money in that little island, personally. They're not in Dubai, Stephen. They're there. They can say where they are, where they like, but please be aware that Xchief Limited does not provide services in certain regions, and the information on this website is not intended to distribute a person, a country, a jurisdiction where such distribution or use would be contrary to applicable law. So basically, they are regulation. Let's have a look. Place of incorporation: Fomboni, Island of Maheli, Comoros Union. Seriously, don't. Just don't. Don't. Forget you saw that, everybody. Wipe that from your memory. I need one of those, like, Men in Black. You were sitting watching a stream and a guy was telling you about the market's move. You did not see anything about brokerages, and you're back in the room. There you go. So I'll be back tomorrow. Actually, you might not be back tomorrow. Don't. Stay away from whoever they are. Away from London, you'll get your phone stolen. Yes. Now that is a thing. Yeah. That's scary, isn't it? These people shoulder surfing and stealing your mobile phones on the back of mopeds. Why you keep changing account? I understand it's demo, but still. Last year you were trading different account. Now it's different. What? No, I didn't. No, I'm not. What's the deal about phones? I saw a video of a mastermind being interviewed, all masked up. Yes, I was on the news yesterday. Yes. So if you walk along with your mobile phone in London, likelihood is somebody will come flying along on a moped, steal it from your hand, and basically take your phone. And then they wait for you to be on the phone looking at something, so it's unlocked. So when they grab it, it's unlocked. They're straight into your internet banking. All sorts of problems. Anyway, yeah. So keep your phone in your pocket. Get a watch that talks to your phone, and use your watch. My public service announcement. So I can't even use opening range breakout for FTMO. No. See, if I was here to sell you a load of stuff, I wouldn't be talking about this, would I? Because I would be telling you not to do that. I would be telling you, yes, you can. I'd be lying to you like the prop firms are. Where goes pound CAD? I don't know. Photoshopped can do wonders. What? Where's pound CAD? I don't know about pound CAD. Am I in pound CAD at the moment? No. We talked about this the other day, didn't we? Yesterday, I think. Yeah, I mean, you're just in a range at the moment on this. So Bailey didn't say anything today. We are expecting that to drop. That is already dropping. So it's going nowhere at the moment. There's a good chance I think it will push back up and retest this propulsion. But we need some news. We haven't got any news. So I think you'll find it'll be either tomorrow we'll get some movement on this in one way or the other. Doesn't matter which way it goes, as long as you get some movement, because if you get some movement against you, you can scale in. If you get some movement in your direction, you can get out. But it's just stuck at the minute. I was in this for ages, look, on the short side, and I got slipped out of the long on the news. So it's going nowhere. You've got a propulsion gap here, which was that range break. So that's your downside support, 175 ADR, and it's about 175 to 200 ADR upside. So basically you're there. It's either going to break long or break short. If it breaks long, it's going there. If it breaks short, it's going there. Hornalls. It's a mystery, that one at the minute. So if you're FTMO, you just eyeball the charts for entry criteria, yeah. Ex-chief defrauded my friend out of their money. We had to do a live on them a few weeks ago. I warned her not to go with them, but she wouldn't listen and she got scammed, yeah. But brokers, basically, the reason I recommend the brokers I recommend are because they are big, established brokers. I only have two that I recommend. I could recommend more, but these two are good leverage. So if you're in the US, tough. Nothing you can do about it, unfortunately. But for decent leverage, Global Prime and Robo Forex, both massively well-established brokers, have been around a long time, large companies. I've traded with both. I've withdrawn from both. I've never had a problem with any broker. People worry so much about withdrawing money from brokers. I have never had a problem with any broker. I haven't traded with that many brokers. I've traded with IC, with Axie, with DarwinX, with Robo, with a few others, FXCM, Alpari, obviously, when the Swiss franc peg removal happened. I've never not been able to withdraw from a broker, ever. But I've never traded with a broker that isn't established more than a decade, because I pick brokers that are big and with the best trading conditions I can get. I'm never going to get good trading conditions anywhere. When you get a demo account, your spread's going to be like that. They're not going to move. When you get a real live account, the spread's going to be like that, and they're going to do this all over the place. Yeah. You can't change anything about brokerages. They are all out to get your money at the end of the day. So just pick a big one. You won't have a problem. That's it. Ex-chief and these brokers out there that are, I mean, I don't know ex-chief. I mean, I can't say anything about them. Obviously, some people have said already that they've had problems, but all these small brokerages that are unregulated, and that's why I do that check I just did, yeah? Where are they? Where are they? I go to who is, how long they've been around. Anything less than 2 or 3 years, forget it. If they're on an island in the middle of nowhere, forget it. Yeah? If they're big established and sponsor a football team or a Formula One team, job done. Yeah? How much money does it cost to sponsor a football or a Formula One team? They ain't going anywhere. Even if it's a small football team, they are not going anywhere. Yeah, that's what your criteria for picking a broker should be. How big are they? That's it. I was with Alpari, the largest broker in the world. When the Swiss franc peg was removed, they went bust. Yeah, but my money was safe. That's the important thing. Your money is safe with a large broker. They are regulated. If they're not regulated in your country, they are regulated in their country. If you're on a tiny little island in the middle of nowhere off the coast of Africa, there's probably nobody else to regulate you there, is there? You'd be lucky if you can get internet. Just use your head. Can I use EA just to enter the trades and manually exit? The thing with EAs, yeah, all the prop firms go on about with EAs, and and this is why it is so ridiculous. Their reasoning behind you can't use EAs is that they have to manage the risk of their portfolio. If there are 10 people trading the same EA that makes profit, they make 10 times the profit. If it loses, they make 10 times the loss. It's not real money. So the rule that they have in place for not using EAs is purely there to stop over leveraging on a demo account with money that doesn't exist. It's rubbish. Yeah. And the reason they all want to do this now is because everybody's out there selling you prop firm EAs, aren't they? Past prop. Do a search on MQL5 Marketplace. Right? And just go to number 1 on the list. Prop firm ready. Yeah. Utter rubbish. Yeah. There's people selling these things with curve fit P&Ls where they will say, look at this test over the last 3 weeks, because you only need 3 weeks to pass a prop evaluation. So let's just look at the last 3 weeks. Hey, look at the prop firm. Look at the curve. Everybody, put this on a prop firm. This is what will happen. You buy it, it goes pop. You go back to this guy and he goes, nah, market conditions have changed or something. So it just something else will happen. But then you're not allowed to use them anyway, because they're trying to stop all the people selling all this crap, because it does pass prop. Yeah. If I built an EA with super high risk, I can pass a prop evaluation very easily. Opening range breakout EA, and I've proved it, can pass stage 1 in the morning, stage 2 in the afternoon, and have you funded in the afternoon. Yeah, in the evening. I've done it. I did it live in the live rooms. In the morning, I traded the opening range breakout on the DAX, passed. In the afternoon, I traded the NASDAQ, passed. 6 o'clock that evening, I posted my certificate and my live funded account with my Forex funds. Yeah. But what I did was I used 2% risk entry and it moved 3/4 of an ADR, 8% profit, done. The next one, I only needed 1% because I only needed to make 4%, moves 3/4 of an ADR, done. All you need is a clean break to 3R. You will pass a prop evaluation. You only need that to happen twice. You're funded. So easy. So easy. But this doesn't happen every day. So what you also need is 2 days or 2 sessions on the trot where it works. Yeah. Out of 5 days, if you just traded DAX, what do you need? 3 out of 5 days to be profitable. That happens a lot. So Monday, tick. Tuesday, tick. Wednesday, passed. Profit. Withdraw. Thursday, Friday, blown account. Reset. It's really easy. But they know that. And they don't want you to do that, because if they do that, they have to pay you. So let's not have EAs. There you go. Let's stop that, isn't it? So you can trade the strategy manually, but if loads of other people do the same thing at the same time, they'll get you. Yeah, they're not stupid, these prop firms. They're there literally just to print money. That's it. They're not interested in making you money at all. That's what they say. But ask them. Yeah, there is rules that say you can submit the EA for approval. So do it. And if they say yes, brilliant. But submit it before you pay the evaluation fee. And get that in writing up front. Because when they turn around and you want to be paid, you can go, no, you said I could. Then you can take them to court. Then they'll go bust and start with a new name the next day. God, I'm a pessimist. Sylvia, you'd most likely have to enter and exit manually, yeah. Opening range breakout EA is hard to do without automation, because the open is very fast, isn't it? This is why I built the EA, because you need to be able to calculate the lot size, place the trades, get the TPs in place. By the time you've done all of that manually, as we saw today, yeah, on the Dow, yeah, that was the opening range. By the time I'd gone, okay, the opening range is excellent. That's right. Okay, let's place hang on, it's gone. We're at 1R by the time I'd even managed to get to the chart to place a pending order. I haven't even calculated the lot size yet. This is why you need automation, because you can't, it's too hard. But normal testing, normal trading with something like RSI 2 or RSI 14 or RSI 21 strategies, you're only checking it once a day, once every 4 hours, once every hour. Yeah. So if for this one, I basically open the charts in the evening. Any setups? Yeah. Press, shut it, come back tomorrow. That's it. You don't need an EA to do that. You need an EA to automate stuff if you can't watch the charts. That's all. If you can watch the charts, you don't need an EA. I build all my tools to automate my life, so I don't have to sit here all day long. but I trade my own capital, so it doesn't matter, does it? Maybe the only way to get around the EA, if you really want to use EA, is a trade copier. A trade copier is an EA. Harold. Trade copier is an EA. You're placing an EA to copy trades from an EA. Doesn't work. Unless you use a third-party trade copier, there are websites that will allow you to do that, but you need to give them the logins for your account, not the investor password, the master password. Most of them are Russian. Say no more. Smash the like, as Mumo said. Thumb. If you ever test RSI2 on commodities, please include palladium. I haven't got palladium, Mumo. I've never had palladium on any broker I've ever traded with. I can't. I don't have it. It doesn't exist on my brokers. The F1 cars always have FX on them somewhere. Yeah, exactly. And this is the thing. It's all about the... David's going on about football, look. I don't know what that flag is. It's England versus someone. Who is that? Switzerland. Is that who we've got in the next round? I haven't seen. Think about it. These companies selling past the prop challenge. Okay, after that, then what? Thanks for your purchase. Good luck. Yeah, that is it. That's all it is. I got contacted by one, yeah, and he wanted me to sell his EA for him. Yeah, so he basically had a prop firm passing EA, and he said, I'll tell you what we'll do. You white label it. You come up with it. You say you built it, and you trade it on prop in front of everybody, and basically we'll sell it and we'll split it 50-50. So I said, well, why would I come to you and use yours? I can just build one to do that myself. In fact, I've got loads of them. I've got the stock index hedge and the opening range breakout for a start, or the price action toolkit, trading price action patterns. That will do the same thing. It just needs a lucky run. And he said, yeah, but mine's already pre-built. And I was like, well, I'm not going to sell something. What happens when they pass? I've had people come to me, right, in Telegram and say, hi, I've got a 200K funded account. Have you got an EA that I could use to trade it? Right. How did you get the account? Someone passed it for me. So you've got someone else to pass a prop evaluation for you, and you've been handed 200 grand. You've no idea what you're doing. What have you paid for this? Well, I paid the guy $1,000 to pass the prop. I paid the prop firm $999 for the account. So you've paid 2 grand to have something that you cannot use. Unbelievable. Just baffles me what people think they're doing in this market. It's just nuts, isn't it? But they do. I don't know why. Pessimistic attitude is the natural result of years of trading. Yes. You can't be positive about something that slaps you in the arse every 5 minutes, can you? Just past top step 50K this morning. Good job, Brian. Top steps. All right, well done. 4 days it took because I managed my risk. 3K in 4 days. Rinse and repeat. Yeah. Rinse, repeat, blow, repeat, blow, repeat, blow. That's it. Just keep doing that. Pull the money out when you get it. And when you don't get it, repeat. Random. Flip a coin. Open up a prop account today on any prop firm you want. Risk 2% of your account 1 hour before the open. Flip a coin. If it's head, go long. If it's tails, go short. Yeah. If it gets to 8%, sorry, 5%. If it gets to 5% loss, try the same thing tomorrow. Tomorrow, it'll get to 8%. Pass. If you can do that 2 days in a row, you've passed. Any trading strategy? No. Flipping a coin and just entering an hour before the market opens. That's it. That will work. All you need is 2 days on the right. So you need to get the head or the tail right. You need the 50-50 shot to be right twice in a row. Go and flip a coin right now. Flip it 20 times. Count how many times you get 2 in a row. That's passing prop. That's it. If you get 3 in a row, you also get a payout on the funded account. Don't need any other strategy than that to pass a prop evaluation. That's it. That simple. Maths. I use an EA and FTMO and already got money. Cool. Yeah, I mean, it depends what EA it is. If it's your EA, then it's not a problem. It's written into the terms and conditions. If you can use your own EA and you can provide the EA, and if you're using an EA and you've flown under the radar somehow, great. But just be careful. Can you put the weight on the yen? Is it going up again? Is it? Yeah, it's still. We should be okay, I think. Okay, can't see it. It's off the top of the screen, but I have got a 10-ton weight there. So market structure's looking good. We need a break of that low, though. If it breaks that high today, I shall be scaling out of more with the loss. And wishing I hadn't done what I told everybody not to do, which is short the yen. But when it does come down, we're playing Slovakia, is it? Okay. Why do they always sponsor F1 cars? Is that common for FX traders, high school dropouts to be watching F1? It's the association with money, I think, is what they're after. Yeah. So everybody sees trading as making money. Yeah. So trading 212 advertise at the moment on increasing your wealth. People in Wall Street that work in banking are absolutely loaded. They all drive Ferraris, live in lovely big houses. Yeah. So trading is associated with money. So what's F1 associated with? The richest sport on the planet, apart from football. Yeah. Everyone in F1 is absolutely loaded. It runs in Monaco. Everybody's loaded. Yeah. You slap something on the side of something that's absolutely loaded, it's associated with money. I think that's partly what it is. And then you realize that actually, unless you've got money, it's virtually impossible to make money. SHM on that 200k funded account. 4:15. SMH on that 200k funded account. I don't know what that means. It's not my EA. Okay, well, fine. Yeah. You've gone under the radar, Jal, but read the rules. Does Top Step use MT4? No, it's Top Step is futures, not Forex. For your information, there are free coin flipping websites. I know. Long today. Come back tomorrow. Okay, long today. Ta-da! Works. It even works in hindsight. It works after the event. That's how good it is, coin flip. It's just brilliant. We should do that tomorrow. For your information, the A's which you sell, which you built, you should be able to use on FTMO, since it's you who built it. I can, yes. Yeah. So I could use my EAs if I wanted to supply the source code to FTMO, which I don't, because if the source code is out there, it's replicated for free. So yes, I'm not giving anybody my source code. Basically, I don't care. I might open a Top Step and trade RSI2 manually. Yeah, do it. Not Top Step, FTMO. Top Step's futures. I mean, you can trade it. I mean, RSI2 on futures, yeah. It's the trouble with RSI2 daily, which is what it's designed for, is you need to hold overnight. You can't hold overnight in futures. So you have to rely on intraday movement being positive the next day. That's not how RSI2 works. Oh, shake my head. Oh, the 200. Oh, yeah. Right. Okay. Yeah. The 200k funded account. I know. It's not the first time it's happened, though. People contact me. I need to make money quickly. How can I do it? Right. Pause your life. Do 10 years worth of research. Come back. Restart your life. There you go. There's no quick way of doing it. If it was quick, we'd all be doing it. Everybody would be making money like that, wouldn't they? If it was easy. It's not easy at all in any way, shape, or form. Ninja. Yeah, Ninja's good. Either Ninja, if you want to use any book map or Jigsaw, are great for order book, heat map trading. Ninja, there's lots of plugins for Ninja Trader for futures that do market profile and stuff like that. VWAP bounces, futures VWAP bounces are a great trading strategy in futures. Just trade VWAP bounces all day long, you'll make money. All sorts of ways. As long as the beautiful thing about futures is it's all about up and down. Yeah, so it's all about getting in and waiting, and then getting out. And most of the time, if you press the long button, you'll be all right. It just naturally wants to do that. Unfortunately, it's not that easy, obviously, but right, I've got to go because I've got to go out. But basically, tomorrow I've got to go out at 8:30. I've got to be somewhere at 8:30 tomorrow morning. So there's not much point in me doing the 7:45 stream tomorrow unless it's literally for half an hour, and I don't really want to do that. So I might well scrap tomorrow mornings. I'm still thinking about what I want to do and looking at the rest of my day. But I've also got to go out in the afternoon as well, which means that the afternoon session might get cut short. So I'm thinking about what to do. But I will post in Telegram and Discord, and I will adjust, obviously, the stream according to what I'm going to do. But I'm still thinking about how I can do it tomorrow. So one of the things I was thinking of was maybe doing a 7:30 session, which is a bit early. But I think what I'll probably do is just maybe scrap tomorrow. But I will post it and let you know. Other than that, obviously, if I'm not around tomorrow, I will be back on Monday as usual. And we will see what happens. Your ADR reversal indicator has a reading on the left-hand top corner where it has 10 equals XX number. How do I read the number? So that is just the ADR. So that is the distance between the lines in pips. Literally all it is. It's just the ADR number. So if you've got the ADR dash, yeah. So on the US dollar yen, ADR is 94. That number there is 94. Yeah, so all it's doing is telling you what the ADR is, what the average steady range of the instrument is. Stop the eye for 10 years, yeah. So yeah, I was told on average it takes 3 to 5 years to become profitable. I think that's pretty conservative. I think if you're doing it within 3 to 5, you're doing all right. Very well, actually. I think it's most people it's longer because the time it takes in study and working out and getting it wrong is so long. Silver, I can't really read all of that now. But yeah, you're going on about trading in EAs and is that from a reply from FTMO? Yes, EAs are allowed, but we do not interfere nor give advice on that. We just want to make sure traders understand the maximum allocation per trader strategy of 400,000. As long as your trading is legitimate, conforms to the real market conditions, and we can replicate our trades on our live corporate accounts, which don't exist, it's a complete lie and a scam, there are no limitations on your trading style or strategy. Sorry, that bit wasn't in there, but that is what they're doing. If you intend to use trading robots, keep in mind that if you use an EA from a third party, you run the risk of being denied your FTMO account if you exceed the maximum. Yeah. So what they're saying is if you use an EA and there is somebody else in the universe using an EA, they will not pay you. Yeah. So that third line you've just posted there is basically their get out clause. If you get to a payday, they will turn around and go, no. And if you say, prove it, they will go, no. And if you ask for any kind of legal battle, they will go, read your terms and conditions. We told you not, you couldn't do it. Go away. Yeah. That's it. But read the rules. There are hidden rules that are completely different in funded, what they call funded, to evaluation. Yeah. It's all different when you get funded, because when you get funded, they are at risk. Yeah. When you're in evaluation, they couldn't give a monkey's what you do. You do what the hell you like. When you get funded, they are at risk of having to use some of their profits to pay you. They do not want to give you money for free, because that's basically what they're doing. They're giving you other people's money, their profits, their bottom line for free. They have every rule in the world there, but they need to let some people get paid, because they need some people spreading the word. You get 100 people on FTMO going, I've been paid this month. Yeah. There were 10,000 that wanted to be paid. 100 of them got through. There's not 10,000. There's nowhere near that many. But it's not even 100. They won't even get 100 people being paid. A handful. Absolute tiny handful get paid. Speaking of walks, JP is liking the new look. Oh, here we go. Powell Dalf. I like him, Powell Dalf. Did you not do another one? It's not bad actually, that is it? Show him Powell. He's got old, hasn't he? He's got old. It's because he's been watching the news, waiting for the CPI figure to come down for such a long time now. He's got grey hair now. It's just not coming down, is it? Hey, don't worry, Jerome. It's coming down this month. Fine. It's coming down this month. Fine. It's coming down. We're going to drop interest rates in the next quarter. Fine. That's all he wants to do. Get drunk. And then look like the Grinch. Anyway, I've got to go. Right, I'll be back, or I might be back tomorrow, probably not, to be honest. So I'll be back on Monday. If I'm not around tomorrow, I will post in Telegram and Discord what I'm doing tomorrow. I need to have a think and see if I can squeeze one in somewhere. But if I don't, have a good weekend. Yeah, just keep your eyes peeled on stuff. As you can see today, nothing's moving. So tomorrow, end of quarter, maybe a biggie. So we'll see what happens. But other than that, fingers crossed. Hope you have a good one. And if I don't see you tomorrow, I will be back on Monday. So have a good weekend.